There we go. All right. Sound's working. Video's working. It's progress. All right. There you are. All right. 2 of you here. Okay, hold on. Got to edit this. All right. Shouldn't be an echo now. Okay. Okay, great. I'm glad you're here. I'm assuming you're not in ridiculous time zone. This is the time that works with me. So I hope it works with you. And yeah, you guys can watch on the playback. All right. So the pick that I want to talk about today is NACCO Industries. We've talked about it before. You've heard me mention it. I mentioned it in the charitable portfolio video. You've seen that it's part of the portfolio. So you know that it's been on my radar, that I've been watching it for a little bit, that I've been studying it and doing a deeper dive. And so I'm going to break down everything that I see that's attractive about this company. And hopefully you find it interesting and you get a little bit different perspective at some other types of stocks that I look at. I feel like a lot of the stocks that I've covered up to this point publicly have been a lot more aggressive. And so hopefully this gives you the more conservative side of the way that I invest. I still think there is a good upside potential just from being undervalued, not even accounting for any growth. I think there's a really solid downside protection. And I think there are quite a few catalysts that could help it bump up over the next year or so. But yeah, the upside isn't going to be the 100% upside that you've seen in some of the more aggressive picks that I've thrown out there. So this one I'm okay with holding for at least a couple years, and I'll explain that a little bit more in just a second. So it's NACCO Industries. The ticker symbol is NC, and I need to figure out OBS and how to put some things on the screen. I definitely should show you my disclosures legally. This isn't a recommendation specifically for you. This is based on my research. This is just me sharing it with you. And hopefully you can use that information to then do your own research, and hopefully you find that valuable. But I don't know your particular situation, so I'm not necessarily recommending that you put it in your own portfolio. Definitely visit spicercapital.com/disclaimer for the full disclosures. So NACCO, NC, its market capitalization is $251 million. Its price per share is around $35 right now. It's been bouncing back and forth. It had a little jump right before the top stock pick video came out in August. So that's why I didn't talk about this one there. It's in the mining industry. And so it has a few coal plants. And that's part of the reason why I like it for the next couple years, but I'm probably not as interested in holding it under a new president. I mean, we'll see. We'll see what happens. And yeah, who knows what will happen with that. But over the next couple years, I expect that the laws affecting coal companies and emissions, that they will be about as favorable as they probably can be. But one thing I like about NACCO compared to its peers is that they are more diversified. They do have those plants, but they also help other plants and other mining operations with equipment and services. So they'll take a mine and bring it up to speed and supply all the equipment and get the operating drag lines and everything in place to be able to start mining. So other businesses, independent private businesses, often will contract them to come in and do that for them, get everything operational for them. And then often they will pay them to maintain it. So they'll have that residual licensing to maintain it. And they do this with several limestone quarries, and they've been doing that with more and more focusing on that side of the business as well. So they've been diversifying away from just coal, which is valuable. And so I like that about them when I compare them to some of their peers. So they're offering those services that they have an expertise in to others. Now their balance sheet, if you dive into their balance sheet, it's pretty good looking. Their cash position for how small they are. Remember, they're a $250 million company. Their cash position is $80 million, and that's just they've just been pretty good with their money over the past. They have long-term debt of about 28 million. So their debt to equity is only 0.2. And 5 years ago, it used to be 0.6. So they're definitely working to reduce that and to put themselves in a position where they are nimble and not overburdened by debt like a lot of other mining companies. So they have a lot of flexibility here, which, as you've seen with EVC and some other examples I've talked about in the past, having a large cash position relative to your size can be extremely beneficial. You are flexible, and a lot of the options that you could pursue are catalysts that will be newsworthy and could cause a gap up in stock price. So they've been focusing on reducing their debt. They do have a small dividend. It's relatively small. It's right now it's 1.89%, but they have a lot of room to grow. Obviously their cash position is good, so they could support something from that, an increase from that. Not that you would necessarily want them to, but the fact that wasn't just from a one-time windfall. The fact that they've been increasing their cash position over time shows that they could support it. Right now, their payout ratio is only 19%. So of all the money that they bring in, their net income, they only spend. They have about 5.2 times as much as they pay out in a dividend. So they're retaining about 5.2 times as much for other things, for capital expenses, to pay off debt. So they have a lot of flexibility there. Yeah, so not only do they have a lot of cash, they also have a lot of cash flow along the way. So they could do a lot. The reason that because some investors on the calls have asked them about why they are maintaining that cash flow and what their plan is for it, if they plan to increase dividends, because that's obviously what some investors would like to see. And I like the CEO's perspective of maintaining that flexibility. You can tell from the purchases that they've made in the past that they are looking for accretive acquisitions. They seem to be, obviously, this is hard to really tell, hard to really get in their minds, but they seem to be taking their time and weighing their options and looking for the best possible acquisitions or best possible, most accretive options that they have to use that money for. And that would be great. Like I said, that would be a newsworthy event that would cause a lot of buys to look at this relatively small cap stock and could cause it to jump up, could be a trigger. So they could use it to increase the dividend. They could just use it for their own CapEx to open new mines if they wanted. I get the impression that they're shifting more away from that and using any resources they have to open mines for other people and enter new lease agreements so they get additional residual income. They could also use it for an accretive acquisition, and they could use it for stock buybacks, which I think they have like 10 million already approved, and they've only done about 100,000 of that. Again, that I highly doubt that they would just all of a sudden do all of that. I think it's probably just with everything they do, it's going to be slow and steady. So if they do increase the dividend or if they do stock buybacks, I bet it'll be negligible increases, but those are newsworthy and they kind of set the pace for the future, which again, can be good. So those are the catalysts that could happen. So the question is, why is this stock suppressed? This stock last year in 2017, in October of 2017, they spun off what ended up being a larger company, only slightly larger. And that happens sometimes, just based on the logistics of everything. But they spun off, this seems totally unrelated, but Hamilton Beach. I don't know if you're familiar with the blenders or the household appliances, but that's the company that they spun off. And so it is a slightly larger company now than NACCO is. But anyway, when that happens, if you've read Joel Greenblatt's book, that you can be a stock market genius. I'm sure you heard me talk about it. I talked about it in a video that I did where I talked about where to find opportunities that have 100% upside or that are 50% undervalued. And spinoffs is one of those areas. Whenever a spinoff happens, as you can imagine, there's a lot of confusion around valuation. A lot of the companies that used to own NACCO because Hamilton Beach was in there, all of a sudden now they're left with shares of both NACCO and Hamilton Beach, and they only wanted Hamilton Beach anyway, so they're glad. Maybe they were even pushing for the spinoff, but now they don't want this, and so they will indiscriminately sell NACCO because it didn't fit with the profile of the stock that they were looking for. And so anytime you have indiscriminate selling, meaning people or institutions are selling stocks for reasons other than fundamental reasons, that's an opportunity for us because that can push the price down. And I know that happened almost a year ago now, but year 2 is historically actually the best year for small cap spinoffs because it takes a while for all of that to shake out. It takes a while for people to really start to understand the company, or institutions to really start to understand the company as it's run by itself, because a lot of times it's really foreign once it spins off and starts to operate on its own, because it used to have two very different business lines and it was operating together. So a lot of times there's a lot of confusion around that, and it takes a while for people to understand it and for it to realize a fair value. So it's current EV over EBITDA, or enterprise value over earnings before interest, taxes, depreciation, and amortization, is just occurred to me that I made this. I don't think I restricted this live. Oh, well, I'll restrict it after this. I think I made it public. Anyway, the EV over EBITDA is 4.24, which is low. It's very low. But the industry as a whole is low, which is understandable. Their industry peer average is 5.79. I think it deserves a premium to the industry. When you look at its balance sheet compared to the industry, it has way less debt compared to its industry, compared to the size relatively, and has way more cash relatively than most of those companies. So they're in a way better position, way more flexible. They're more diversified than those companies. If there is some sort of law or restriction or whatever that puts a damper on the coal industry, they will be less affected than those other companies. So I think they're more nimble and more flexible in a lot of different ways. So I think they deserve a premium, but even if you just look at the industry average, that implies a 33% upside. And I think that's a conservative number to look at for those reasons that I just mentioned. And remember, that's today. So this is that's the margin of safety. Like, even if it never grew, even if there was no growth, even if they didn't use that money for an accretive acquisition, right, to help them grow even faster, that's what this is assuming. So even without that, I'd argue that there's a 33% upside, just because it's mispriced, it's undervalued because people don't understand it. So that's where that comes from. Keep that in mind. That's true with all of my evaluations. When I'm talking about the upside, I'm not even talking about from a growth perspective. A lot of times that's icing on the cake if they end up growing, and I'm not expecting them to not grow. I think they're doing a pretty good job here. I think the CEO, the vision that he's outlined makes sense. And so but I'm just looking at the fact that it's super undervalued. And then the downside protection, where I said there's pretty solid downside protection, I think that just comes with their solid balance sheet and with their discipline in the past at how they've built that up to be so strong, and how they've been pretty conservative with the way that they use the cash. And I know that can be annoying to a lot of investors, but it shows discipline, and that can help with downside protection. I'm not worried. I'm not as worried about them burning through the capital as I might be about Intravision, for example. I'm not. I mean, like I said that in the video about Intravision, that they could burn through the capital, and I need to and it not be, the acquisitions not make sense, and I need to reassess it, and that's fine. Because I specifically mentioned that because I said the fact that there are so many opportunities for dramatic upside that was worth it to me. That made the risk reward worth it to me. Well, I don't think I have to worry about that here. I don't imagine them. They're not going to burn through it all. They might make a bad decision with it, or a decision that I disagree, but I don't think it'll be anything like they spend $80 million on an acquisition tomorrow, and now they have no cash, and it was a bad idea. Now I may eat my words tomorrow when a news press release comes out right then, but that's the impression that I get, and that's why I feel like there's a pretty solid downside protection because of all of that. I would love to do with a company like this, because they have a lot of different parts, they have different mines and a lot of big equipment that has value. I would love to do a sum of all parts calculation for them, but it is pretty difficult to just on my own find comps for the different properties they have. So I'm going to try to reach out to investor relations or the CFO, whoever makes sense there, and see if I can find out that information, because that would also help with the downside calculation, knowing what the individual mines are worth or what other companies have paid for similar mines to what they own or similar equipment to what they own, just to have that idea myself going as I continue to invest in this position. Anyway, that's the case. Limited upside, but more upside than most opportunities out there. Limited compared to some of the other picks I've talked about, but very strong downside protection and a lot of catalysts that could cause it to gap up overnight at any given point in time. So anyway, I hope that was valuable. I hope this live experience was a little bit better than last time, since you can actually see me. If that helps. If you have any questions, leave them in the comments, and I can get to them. I don't see anything right now. I may be looking at the wrong place. I apologize. Like I said, we'll get this figured out. But yeah, I hope that helps, and I look forward to hearing your thoughts. I'll see you in the next one.